Hello student, I am Assistant Professor Saili Patil. Today we are going to learn about the topic accounts from incomplete records, that is the single entry system, which you already studied the first part, that is the how to prepare profit or loss for the year in 11th or the 12th standard. So today we will discuss the another method of another conversion method for the single entry system to double entry system. So according to this, we will learn in this lesson. So in single entry system, we will learn meaning, types, features of single entry system, advantages, disadvantages, difference between single entry system and double entry system, format and procedure for conversion of single entry system to double entry system. In this heading, we discuss about first part, that is the definition and types of single entry system. First, we discuss about the definition of single entry system. Single entry system may be defined as a system in which the accounting records are not made strictly according to double entry principle of books of accounts. So in this case, you can say single entry system only some or personal or limited accounts are maintained. A system of bookkeeping in which a rule only records the cash and personal accounts are maintained. It is always incomplete double entry varying with the circumstances is known as a single entry system. Single entry system is actually it is not a system, but in many small business maintain their accounts as this method is it is economically and it used for the smaller organization. Under this system, each business transaction are recorded only once in a ledger. Under this system, cash book and only personal accounts are maintained, but no other accounts are recorded like real account, nominal account are maintained, but therefore in respect of transaction involving real account and nominal account only cash except cash and nominal accounts only one aspect is recorded. So this system is usually followed by the non-corporate entities, that means the which is not considered as a legal entity, they don't have any legal entity or there's separate legal entity. Sole proprietor and small partnership firms are followed this single entity system. So what are the types of single entity system? There are the three types of single entity system. In first single entity system, that is the pure single entry system. Under the system, only personal accounts are kept. No records are kept for real accounts or nominal accounts. So, in case of pure single entry system, only personal accounts are recorded or the related with the transaction or related with the personal accounts are recorded. No real and nominal accounts are kept. Then simple single entry system, under this system personal accounts and cash books are kept separately. In simple single entry system, personal accounts and cash book are kept separately. And quasi single entry system, under this system personal accounts, cash book and some other subsidiaries are kept separately. So in quasi single entry system, some limited, it is not full or according to double entry system, but they are maintaining some accounts like personal account, cash book and some other subsidiaries like debtors and all those things are maintained separately in quasi single entry system. Then we discuss about the some features of single entry system. Single entry system followed by a sole proprietor or partnership firm, the companies cannot follow the system. According to, as we discussed in previous, it has a limited, they kept their accounts with the limited accounts, and so in case of companies, they cannot follow this system because it has its own limitation. Under this system, only cash book is maintained and mix up with the both the private as well as business transaction. As you know, all the transactions are recorded in the under this heading. They are recorded all the transaction in a one separate book, that is called cash book. Whether it is a private, whether it is a business transaction, both transactions are recorded on a similar headings. In this system, generally personal accounts are kept and real and nominal accounts are ignored. In the absence of recording twofold or the double entry system aspect, only real and nominal accounts are recorded and other accounts are ignored. Lack of uniformity in notice if accounts are kept under single entry system, it means there is no uniformly use or any rules followed for any business for the recording of such transaction. So profit or loss under the system can be ascertained, but not financial position as whole. They are preparing only statement of affairs and not a balance sheet. So arithmetical accuracy of the account is not possible since the trial balance cannot prepared, and practically the system is the admixture of single entry, double entry, and no entry. Means they can use somehow part of a double entry system, but they are not properly or use total uh, method of double entry system. So under the system, profit can be found by the comparison and will not be available sometime. The mixture of double entry, single entry, and no entry, as we discussed, it is suitable for the small business concern, and it is classified into three categories, that is the pure, quasi, and single entry system. Is there any advantage for the single entry system? Yes, there are some advantage as we discussed. It is a simple to easy because there is no n number of accounts are maintained. No professional are required because it is maintained, can be performed with the single entry system. This type of accounts suits for the small firm or the uh, firm with the smaller transactions. Income and expenses are accounted for daily, recorded daily transactions are there. Only limited accounts are open since all the transactions are related to personal accounts are recorded first, and nominal and other accounts are ignored. As mentioned in the previous point, the limited accounts are open, and that's why there is a book scarce of books and there is no extra books they have to maintain. So accounts are also limited. This system is purely based on income statement, and hence it becomes easier to determine the profit and loss through the calculation of only the income statement. Now we discuss with the disadvantage. As you see, it is highlighted with the other color because n number of disadvantages present in single entry system, and that's why it is necessary to convert that single entry system into double entry system, which is the uh, base of our lesson. Arithmetical accuracy of books of account is not possible since the trial balance cannot prepare under this system because they are only prepare some basic accounts and not whole or the double. They are not following double entry system. It is not possible. It is not possible to to find out the correct amount of profit or loss. Cannot ascertain because the trading and P&L account cannot be prepared. True financial position cannot be ascertained because balance sheet cannot be prepared under this heading. Therefore, financial position you cannot identify immediately. Arithmetical accuracy is not possible. Possibility of committing fraud or manipulation is greater in the comparison with the double entry system. It is difficult to conduct the audit of such records. It is difficult to operate internal control system. It is not possible to identify to control over the assets, and it is difficult to identify the frauds whenever it is committed. And any statistical information relating to the business or the comparison between the two firms or interim accounts which helps to management to take decision not possible in case of single entry system. So outsider, income tax authority, bank, they do not rely on this system, and that's why we have to go or convert our single entry system into double entry system for the understanding and the use of n number of purpose. Now we discuss about the what is the difference between single entry system and double entry system. As you know, single entry system explains only the personal accounts which include the cash, debtors, creditors accounts only. But in double entry system, all transactions are recorded in double twofold, and that's why it tells about the business financial position of the organization. It records only related with the business only, but in records all effects of transaction are recorded in double entry system, whether it is personal, whether it is private, related with the business and non-business also. So the incomplete system of recording the transaction can easily record the fraud transaction and hard to find errors. So complete in this double entry system, complete system of recording of transaction and easy to find out the errors, easy to identify the fraud transaction. Uh, Personal accounts and cash accounts are included. Not only the personal accounts and cash accounts are recorded. All accounts are considered and recorded under this heading. Single entry system cannot consider by tax department for the calculation or for the consider of the profit and loss of that business, but accepted double entry system accepted by the taxation department. It is not possible to calculate profit loss under the single entry system. Easy to calculate profit and loss account. Suitable for small business, it is not. It is suitable. Double entry system can be used for the all types of organization because it gives the idea about the business position. It is very easy to implement single entry system. There is no implementation cost as you cannot require or the business cannot require for the expert person in single entry system. But in double entry system, you have to record or you have to appoint expert person for the recording of your transaction. So it increase the cost of implementation means expenses are there. Reconciliation of accounts is not possible in single entry system, but in double entry system you can reconcile of your cash book with the passbook or any transaction with the other transaction. Special knowledge is not required as it is not implemented. It is a simple in single entry system, but in double entry system the person or the with the special knowledge is required. Trial balance cannot be prepared in single entry system, but in double entry system trial balance can be prepared. As we discussed, it is a single entry system cannot be authorized by tax department and it is not suitable for tax purpose. But in case double entry system is authorized by tax department and it is suitable for the recording of tax purpose. Difficult to prepare financial statement and difficult to explain the financial position of organization with the single entry system. But double entry system decisions taken is possible as well as the preparation of financial statement and business financial position can be easily explained with the help of double entry system. So these are some advantages and disadvantages related with the single entry system and double entry system. Now we move towards the conversion of single entry system to double entry system. If you want to convert your single entry system to double entry system, there are the steps we have to follow in this procedure. We in this point we discuss only theoretical background, and in the next heading, next PPT or video, we can discuss with the numerical questions. So first, find out the opening capital by preparing opening statement of affairs. It is very easy. It is prepared by you in 11-12 standard. Then start with the recording of opening journal entry, that is asset to liabilities to capital, that is your balancing figure, which gives the idea about your to find out your opening capital. Then we work with the cash book or cash account, which is prepared on the cash account debit side. Recorded whatever the headings are there, that is the opening cash balance, that is opening cash or bank balance. It is transferred to the old or the opening capital, opening statement of accounts. Fresh or the new capital if introduced on the debit side of cash book, it is added to the capital in the closing balance sheet. If cash sales are there, it is recorded on the trading account credit side as a cash sale. Amount received from debtors and bills receivable recorded on, if it is recorded on the debit side of cash book, it is to be transferred to the credit side of debtors or bills receivable account. Cash sale of asset, it is included in the asset in closing balance sheet. So it is deducted from the asset in closing balance sheet. If income received recorded on the debit side of cash book, it is transferred to the credit side of profit and loss account. So there are some headings related with the cash book. Then if the cash book account credit side, some headings are there, that is the closing cash balance, it is transferred to the closing balance sheet. Drawings are there, it is to be deducted from the capital in the closing balance sheet. Cash purchase are there, it should be recorded on the debit side of trading account. Amount paid to creditors and bills payable, it is transferred to the creditors and bills payable accounts debit side. Purchase of assets are there, if it is, it should be added in the purchase in the closing balance only, in the closing balance sheet only. And expenses or any expenses recorded or paid on the credit side shown on the credit side of cash book, it is to be transferred either to be debit side of trading account or the profit and loss account. Then we have to prepare some basic accounts like total debtors account, total creditors account, bills receivable account and bills payable account. It should be prepared for, with the help of these headings we can find out the credit sale, credit purchase, balance of debtors, creditors, bills payable and bills receivable respectively. So total sale will be cash sale plus credit sale. Total purchase will be cash purchase plus credit purchase. Nominal accounts for expenses revenue should be prepared with the help of information given in cash book, and the real account and those accounts record according to the ledger accounts. Then the necessary journal entries should be recorded and prepare final account, profit and loss account and balance sheet according to the after the calculation